Okay, so I'm gonna get going. Stuart, we good to go? Give me a thumbs up, yeah? Perfect. Okay, thanks, guys. Well, first of all, thank you so much for having me. I was so excited when Denise and Stuart reached out and said, "Hey, would you speak to the Breakfast Club?" I feel like the Breakfast Club is like this elite group of people that is an insider to the insider group. So I was honored to be invited to speak, and I put together something really good today. I didn't want to overdo it on the content. I did not want to spend an hour and a half talking. I wanted to. So I'm probably going to speak for about roughly 30 minutes, maybe 40. We'll see how long it takes. But then I want to keep some time for Q&A, because ultimately that's where the real, a lot of value lives. Is you guys have questions. You have unanswered questions that are like, should I do this? Should I do that? Is this better than that? And I want to leave a lot of time for that. So please prepare your questions now so that when we get to the end, you have some, and if you don't have any, then that's fine too. But I want to really honor you by answering all the detailed questions, which I can rarely answer in a big REIN meeting, because there's 200 people or 300 people, and it's difficult to sort of get everyone's attention. But in this particular environment, I can get right into the nitty gritty with you. So start getting your questions together, and the technology over there is really great. I'm super impressed with what Denise and Stuart put together in terms of the microphone and all that. It's great. So thanks for having me, folks. Awesome. Today is all about another layer of helping you crack what we call at REIN, cracking the 3817 code, and taking your real estate investment to the next level. That's what REIN has been continually doing, and you've noticed a real laser sharp focus on this particular topic in the last 8-12 months, which is by introducing our Real Estate Investing in Canada online course, by redesigning our all access membership, introducing the new Raising Capital event, which I'll talk a little bit about today, and our new Elite 52 coaching program, which if you haven't heard about that, you'll hear about it perhaps at Acre. But this conversation and what I'm going to share with you today is actually a preview of what we teach at the Raising Capital. It's 80% those slides are a preview, and then I've inserted some special stuff for the Breakfast Club. I call you guys the Breakfast Club. Is that a good name, or?
Yeah. The only thing that worries me is this is not the Saturday morning detention class from high school.
Or is it, Stuart? Or is it?
Don't know what to tell you.
So that's great. So like I said, this is a preview from our new REIN success formula for raising capital and strategic partnerships. And Denise and Stuart are going to be at that. Excited to see you guys there. That program, by the way, has got a big track record, $350 million of capital raised, and it's a turnkey system. And I'm not selling it here today. That's not my intention at all. I just want you all to be aware, because you're Ottawa and you don't have we only get quarterly meetings. I want you to be aware of this program, because I do expect it's going to sell out. And I would not want you to be like, hey, I never even knew about this. So it is April 21st. You'll hear more about it at Acre if you're joining us. If you're not joining us at Acre, well, you're kind of crazy a little bit. But anyways, that's for another day. Okay, let's talk about this. Marketing is like kissing. The job of marketing, and as real estate investors, we have somehow been able to build multi-million dollar businesses, some of us, without doing a whole lot of marketing, which is quite rare if you think about it. I mean, if you think about a consulting business or a coaching business or any kind of business, this retail or that retail, I mean, marketing is a key part of that business. And many of us as real estate investors have millions of dollars of real estate, and we don't do a lot of marketing. But what you're noticing is as you go to the next level, getting a few $1 million of property without marketing is okay. But then as you go to scale, and you go to jump to commercial, and you go to jump to multifamily, and you go to jump and you want to have a portfolio of not 5 properties, but 15 properties, marketing becomes the bottleneck. And it becomes a key part, which is why Patrick and I have spent a lot of time educating the REIN community on marketing. So marketing's like kissing. The job of marketing is to make people lean forward to you so that you don't have to be chasing other people, rather they are chasing you. So my job today really is to give you some real good meat and potatoes, which I always deliver in my talks. It's what I pride myself on. So I'm going to give you systems today, but I also want you to, I need to reframe how you think about marketing, because most of us as real estate investors don't do a lot of marketing. So I know that I need to reframe what marketing is. So I want you to start thinking about marketing as a strategic partner. Marketing is like an employee that's working for you while you sleep. If you think about marketing as someone who's doing work while you sleep, all of a sudden it gets pretty exciting. All of a sudden it gets pretty fun to think, shit, someone's working for me while I'm sleeping. So that's what marketing is. And the job of marketing is to make people lean forward, because you can never kiss someone who's backing away from you. I've tried many times in my teenage years. It doesn't work. But you just can't. So marketing is like kissing. It makes people lean forward so that you can have a conversation about business with them. Now, the thing is this works. And when we think about marketing in the real estate business, we immediately default to tenants. We default to the clients that pay the rent. We default to that because that is a big part of marketing. But there's so much more to that. When you think about marketing, you got to be thinking about attracting partners and raising capital. In today's day and age, every single one of us, to get to where we really want to get, which is, if you want 2-3 properties, you could do that on your own. If you want 5, maybe. If you want 10, you're going to probably need partners. And if you want 15 plus properties and doors, you're going to need partners at some point. Whether you go to commercial, whether you go to multifamily, whether you go to industrial, working with partners is more relevant today than ever before, and marketing plays a key role in that. The other thing is growing your portfolio. Marketing will help you grow your portfolio. Marketing will help you increase your active income. I know many of you in the room do a lot of fix and flip or strategies that are more active income strategies, and you've noticed that marketing is much more important. If you're, for example, if you're going to be an assignment specialist, man, you got to be a great marketer almost first. Before you need more marketing knowledge than you do real estate knowledge if you're going to be great at assignments. So increasing active income, if you get good at marketing, obviously attracting clients and tenants. This one's important: overcoming tougher lending conditions. If you do a good job at marketing, you will actually make your life easier with regards to getting lending, whether that's bank lending, A lending, B lending, whether that's private lending. You will make your job easier when it comes to lending. And ultimately, at the end of the day, we're all investors. If there's one word we all understand, it's ROI. Is this going to make me money or not? Because if it's not, then I'm not sure I want to do it. And my argument is that if you invest the right amount of time, the right amount of money in the right areas of marketing, the ROI is through the roof. So this is my argument today, and I want to start by trying to shift your perspectives. All of you in this room are I think 99% of you are REIN members, so you all have the right perspective when it comes to, mostly the right perspective when it comes to real estate. But do you have the right perspective when it comes to marketing? So I'm going to start shifting your perspective right now, and I want you to start by considering lifetime value. So when you're making a marketing investment today, all of us, and it's only through training that we could retrain ourselves, all of us, when we make a marketing spend, we don't look at it as an investment. Every single one of us look at it as a cost. It goes directly on the P&L. It gets written off right away, and it's not. It's really not an investment in our minds, but it really is if you consider the lifetime value. So just like, and you've seen great people, and I want to draw a parallel that you'll appreciate, which is, think about a health. There's a health and wellness nut over there in Ottawa. I don't know who's the health and wellness nut over there. Raise your hand. Let me see. There's somebody who values health and wellness. Yeah, so perfect. Couple of you, perfect. So you understand lifetime value of health and wealth. You understand the lifetime value of health. You consider every time you put something in your mouth, you consider its lifetime value. You consider its lifetime effects on you. So from a health perspective, we often get it. It's the same from a marketing perspective. So when we think about lifetime, and my job here is to get you thinking differently. So when you think about lifetime value, when I look at properties like Vistra Property Group, my real estate company, we specialize in purpose-built duplexes and threeplexes. This is a picture of the first one we ever built. Every time we build one of those, we know that it's going to put 250 to 400 grand in our pocket. We just know that. We've done the numbers, we've ran the numbers. So how do you think I think about putting out a little bit of marketing or a little bit of effort or a little bit of something as it relates to getting one of these deals done? Well, I'm very motivated because I know it's going to be a $250,000 to $400,000 lifetime value. Every time we do a fix and flip and we buy something like this and we turn it into something like this, we know that we're on average going to make $47,000. We know that because we've run our numbers. So my question is do you know your numbers? Every time we do an assignment and we buy one of these beautiful premium properties with missing windows and missing wiring and rat infested, and we do like an assignment deal, for example, we know that the profit on that is about $25,000. We know that. So I want you to think the first exercise for you, and you don't have to do it now, but I want you to jot it down as a note, is what is your lifetime value? What is the lifetime value of, and I want you to think about 3 categories. What is the lifetime value of your tenants? How much do they pay you in rent? How much profit does that rent truly generate? Because someone pays that $1,500 in rent or $2,000 in rent. Okay, so you know you're all strategic and sophisticated real estate investors. So if you don't know what I'm about to tell you, then you're not doing your job. You should know. You know that every time you get $2,000 of rent, you know how much cash flow that's putting in your pocket that month. You should also know how much mortgage pay down that thing is generating. You should also know the appreciation of that property on average over the course of time. So you should know how much a tenant is worth. How long do they stay on average? Do they stay for 2 years? Do they stay for 3 years? Do they stay for 4 years? How much do they pay? And what's that truly worth to you? If you figure that out, you'll start to look at marketing differently. Same with properties. I know there's so many strategies, folks. Some of you do assignments. Some of you do fix and flip. Some of you do fix, flip, and refi. Some of you do just mortgages where you're just doing private lending. Some of you do just buy and hold. Some of you do condos. Some of you do all of the above. Figure out what the lifetime value is of your properties. Then I also want you to figure out the lifetime value of your partners. So when you work with a partner, and half of you in that room in some way, shape, or form have done partnerships before, whether it's co-ventures, joint ventures, LPs, whatever the case may be, you're all at different stages. What is the value of a partner? When you find a partner who invests $50 or $100 or $200,000, what is that value to you? I understand there's $100 grand coming in. Say I'm giving you an example. Say there's $100,000 of an investment made from someone else. What's that worth to you? And if you figure that out, and if you consider the lifetime value, it'll really have an effect, a profound effect on how you think about marketing. Because marketing is what's going to drive the bus, what's going to drive the engine to you getting more partners, more properties, more tenants. So think of it from that perspective. That's your homework. I want you to do that. The next REIN member meeting is coming up soon. I would like all of you to come to me and tell me your lifetime value. Share with me your numbers. And if you don't know how to figure this out, then send me an email and I'll help you figure it out. Okay? So that's the first step. The reason this is critical is because if you're interested in scaling, and the word scaling scares people, but if you're interested in growing, expanding, scaling your real estate portfolio, you need to systemize your business. You know, when you invest at REIN, we teach about treat your real estate investing like a business, which is 100% true. One property is a business. And who there in that room has one property? Raise your hand, like just one or two. Say one or two. Okay, so perfect. That's great. Awesome. So if you only have one or two properties, you have a business. There's no doubt you have a business. Now, when you get to 5 properties, well, you have a different size of business. It's still a business, but it's a bigger business. And when you get to 10 properties, you have a bigger business. Who there in that room has over 12 properties? Let me see. Raise your hands. Okay, wonderful. So you have a whole other level of business. So what's important is if you want to go from 3 to 5, 5 to 10, or from 3 to 8, 8 to 17, you need to create a scalable business system. as it relates to investing in real estate. And the only way to do that is to understand lifetime value. And this lesson was really driven home to me back in 2012, when I figured out in my marketing company back then, I figured out that every time we invested $200 into marketing, we generated $2,600 in revenue from that $200 investment in the first year. So just by a show of hands, just to make sure everyone's not falling asleep on me, who would trade $200 for $2,600? Raise your hand if you'd make that trade. Okay, great. So we figured out that in the first year that happened. Then we figured out that in the lifetime of that client, our $200 investment actually became $8,000. Well, that was an awakening for us. And when you can get your business, including your real estate business, to that point where you have that much confidence, what we did in that case is we took our company from Toronto. We were just a Toronto-based organization, actually north of Toronto in a little place called Stouffville, working in a basement, from 12 employees, and we expanded to 14 countries, and we had 170 employees. We all did that in 3 years, from 2012 to 2015. And the catalyst was those numbers. The catalyst was the lifetime value. Because if you knew, folks, I just want to ask you one more time, if you knew that every time you invested $200, you got back $8,000, who would mortgage the farm to spin that machine faster? Did you see your hands? Okay, perfect, good. That's the perspective. So we need to start shifting perspectives, okay? Now that we're starting to shift your perspective, you need to invest in your number one asset. And as a real estate investor, we get fooled. We get fooled thinking that property is our number one asset, but it's actually not. The number one asset is you and your brand. That's your number one asset. It happens to not be on your balance sheet as a real estate investor, oddly enough. But if you look at the most powerful companies in the world, their number one asset is their brand. And it's the same with you as a real estate investor. It's no different. If you're just an individual trying to get to 3 to 8 to 17 properties, you and your brand is your number one asset. It's just not on your balance sheet the same way your properties are. But don't be fooled. Now, what's the number one rule in real estate success? The word starts with an L. What is it? I can't hear you, but I'm going to assume.
Because we had the mute on.
Go ahead.
Let's try leverage.
Location. Right? So in real estate, that is the number one rule. We all abide by it. We all know it. We've all made the mistake of thinking, oh, well, we can invest in that place, and it's not the greatest location, but it'll probably do okay. And then the market doesn't go in our favor, and next thing you know, we get screwed. We've all been down this road. It's the same with your online location. Okay? Your online location is your hub. It's your online real estate, and most of you are not capitalizing on it. Whether you have a website, whether you have your social media properties, which, by the way, that's what social media is. Social media is social media properties. They are assets on your balance sheet. So let me ask this question. By a show of hands, who here hates social media? Raise your hand. And it's okay, because I'm the first one. Like, it's so time consuming. Raise your hand if you hate it. It's okay. Okay, perfect. Couple of you. Perfect. So do I. I'm not a big fan of social media, folks. Like, I'm not the one. You'd be shocked if you hung out with me for a week. You'd be shocked how little time I spend on social media. I'm not that guy that's on social media 24/7, seeing what everybody's doing. And I'm not that guy. Well, first of all, I don't have the time for it. But also I use social media to my benefit as much as I possibly can, but I'm not that guy that's in love with social media. What I'm in love with is that's where everybody's hanging out. What I'm in love with is that's where all the eyeballs are. And if I'm going to build my brand and my reputation, I need to be in front of those eyeballs. Now, back in the day, the eyeballs were on televisions. Nowadays, the eyeballs are on social media. So the eyeballs have shifted, which is totally okay. So I'm not a big fan of social media myself. I just want to debunk that myth that you don't have to love social media to be good at marketing. You definitely don't. Because this is about them, not about you. Whether you like social media or don't like social media, whether you like Instagram or don't like Instagram, whether you like Facebook or don't like Facebook, that doesn't matter. It's not about you, it's about them. And if you could live within that realm of it's not about you, it's about them, which is a key theme for the rest of my talk, you'll start to do much, much, much better at social media. Now, social media especially, and all marketing, but really social media, it's about controlling what other people are saying about you when you're not around. So, and to elicit, and I've had some amazing feedback from the next slide, because so many people are finding this to be true nowadays, is social media has evolved and no one's noticed it. So back in the day, so let me go back to the beginning. Do you remember a time, folks, when email first came out, and when you got an email, you checked every single email? You remember that? You checked every single one, every spam, every newsletter. You read everything that came into your inbox. Now, did that change? Absolutely. Now, I don't even check my email at all. You guys know I'm famous for this. But most of you check very few of your email. Email open rates have went from 97% in the year 1998 down to 8%, today. That's called evolution. The platform called email evolved from 98 to what we are today. It's the same with newspapers, by the way. If I go back even further, newspapers back in whenever they were invented, okay, everyone read every single word. Everyone. And then the media itself evolved. And what ended up happening? Who here read a newspaper this morning cover to cover? Raise your hand. Yeah, that's right. Who here read a newspaper in the last week? Yeah, perfect. There was a time not too long ago when all the hands went up and it was a daily thing and it was cover to cover. So the medium, which is the media, changed. It evolved. Now social media has done the same. Back in the day, and when I say back in the day, I'm talking 2 years ago, 3 years ago, you would consume everything that everyone did. Okay, you remember that time when you knew what I had for lunch at the same time as I was having it, because you were on it that much and everybody was on it that much. But now there's a new era of social media, and it's called binge consumption. And binge consumption, what I mean by binge consumption is you're not consuming it as it happens, but let's just say some of you, who here, this is the first time you hear me speak, raise your hand. It's okay, I won't be offended. Okay, perfect. What you're gonna do next, by the way, is you're gonna go to my social media, and you're actually probably doing it right now on the phone while I'm talking, and you're gonna go to all my social media and you're gonna binge consume what I've been doing for the last week, month. You're gonna find out that I just came back from Mexico. You're gonna find out about my holiday. You're gonna find out about Acre, Vancouver. You're gonna find all this stuff. You're gonna binge consume me in a short period of time, and then we may not interact again. Now, this is a very important point for social media. And the reason for that, it's a very important point for you as a real estate investor, because this is what lenders are doing. This is what tenants are doing. This is what your partners are doing. This is what everyone who wants to do business with you is doing. They meet you, they shake hands, they think, hey, that Denise and Stuart, they're a great couple. Wow, they're fantastic, great investors. I wonder what they're up to. Boom. They go, now hear me correctly, they go to their platform of choice, not your platform of choice. If they love Instagram, they're going to check out Instagram. Now, Denise and Stuart, I know they're big on Facebook, and I don't even know if they're on Instagram, because I'm not sure. I don't see many posts from them on Instagram, but they would go to where they want. So if that person is a big Instagram person, they'll go to Instagram. They won't go to Facebook. Now, Denise and Stuart may have an amazing property called Facebook for Denise and Stuart. I keep picking on you. Is that okay, guys? Yeah, you're in the front. I could see your faces. So, so you may have an amazing Facebook property that's beautifully designed and lots of content and lots of information, but they don't care about that. They went to where they want to go. They didn't go to where you wanted them to go. So think about that, okay? Binge consumption is changing social media, and it's a very good thing, because this means it doesn't matter if you make a post right now. It doesn't matter if it gets a like, if it gets 6 likes, if it gets 60 likes. That shit don't matter anymore. It used to matter 3 years ago. It doesn't matter anymore. What matters is that you're in the moment, because when people come back and they binge consume your profile, they will see what you've been up to for the last week, month, year. They're going to scroll down your Facebook feed at least 6 months back. That's what's important about binge consumption, and it's changing how we use social media, and nobody knows it. Now, the 2 platforms, again, I say it's about them, it's not about you. When you think about what platform you should be on, and I've said this to most of you many times, it's about them, not about you. So it doesn't matter what platform you like. What matters is where are your clients hanging out? Where are your lenders hanging out? Where are your partners hanging out? Now, these 2 platforms are the 2 most powerful platforms from a reach perspective and from a public perspective. So the average lender, 90% of the lenders, 90% of the partners, 95% of all people will be on these 2 platforms. So if you're not doing any social media, and if you're like, listen, JG, I love your energy about this, dude. I love your enthusiasm, but I just can't handle it. I can't be posting on all this shit. I just can't handle it. If you ask me to decide for you which 2 you should focus on, it's these 2. Facebook, because it's the behemoth and will continue to be the behemoth for the next 3, 5, 10. I mean, Facebook isn't going anywhere the same way Google has not gone anywhere, right? Think about this, guys. I got to we've been through this cycle so many times. Sorry, by the way, I always get passionate. Is this good? Raise your hand if you think this is good. Am I going down the right path with this content? Okay, great. So think back to Google 2000, guys, okay? You all checked Yellow Pages. That's where you did your shopping, by the way. You didn't use Google back then. You did Yellow Pages. Then you tried a search engine called Metacrawler. It never freaking showed you what you wanted. So you decided to abandon search engine altogether, and you went back to the Yellow Pages. Then Google came about, and we all thought, every single one of us thought, you know what? It's not going to be around very long. Yellow Pages is going to figure this out, and we're going to get back to Yellow Pages, and Google's not going to be around very long. Well, Google proved that wrong. And it's the same with Facebook. We've all thought at some level, some of you thought it last week, and some of you thought this in 2012, Facebook wasn't going to be long-term. Guys, these businesses are worth $500 billion. They're not going anywhere. So Facebook is a behemoth. It ain't going anywhere, and it's not stopping. Now, LinkedIn, the reason I point out LinkedIn is for the business world, it is one of the best. And that's not why I'm suggesting it, though. I'm suggesting it because LinkedIn is the only social platform which has actually done a full cycle in its lifetime. What I mean by this is it got really, really popular, and then it started getting unpopular. And it's the only social media property that has actually regained popularity. So it went from popular, it started losing popularity, and it's actually figured its shit out so well that it's actually becoming more popular. LinkedIn is as good as Facebook was in 2015, just to give you a sense. So LinkedIn, if you're not investing in LinkedIn, I highly recommend you do. Highly, highly recommend you do. Okay, good. Let's move on. When it comes to marketing, systems make the difference, okay? The problem with marketing is I've debunked this after many years of not figuring out why people don't do marketing. It's a very difficult thing, marketing, because it requires both the left side of the brain and the right side of the brain, and most of you are dominant on one side. So some of you love the creativity of marketing, some of you love the numbers behind marketing, but marketing requires both sides to be a great marketer. And what I found is if you can systemize marketing, you will go from an adoption rate of 30% or 20% up to 80%. I don't expect any of us to become hardcore JG marketers, look at the data every day. I'm not expecting that. I just want you to do more of it so you get a better ROI on your time. That's what I want. So I'm going to give you now a couple systems to make marketing easier for you so that you don't have to create from scratch so much, and you don't have to sit there thinking, well, what the hell do I do now? I'd love to do a Facebook video. I'd love to do a post on Instagram. I'd love to do a post on LinkedIn, but I don't know what to say. Let me solve this for you now. So I'm going to introduce you to something called the content formula. This is something I've been doing now for 13, 14 years. It's a formula we've put together in order to write great content. And whether you write content, whether it's an audio, whether it's a video, how the content is delivered doesn't matter. If the content you're delivering in video form, in audio form, in presentation form, in email form, in blog form, and it doesn't matter how it's delivered. If it follows this formula, it'll resonate with your audience. So take this formula down and just make it easy for you. First of all, I ask myself, what is the objective of this content? So I followed this formula, ladies and gentlemen, for this talk. I sat down, I remember Denise or Stuart. In my phone, it says Denise and Stuart, so I never actually know who I'm texting with. But I was texting with one of them, and I was asking questions in terms of who it is, who's going to be there, and so on and so forth. And I decided on an objective for this talk. What is my objective? What do I want to get across? So I decided that. Then I asked myself, who's my target population? Who's listening to me? Who's in the crowd? Who's watching this? Who's listening to this? Who's reading this? What is the target population? And you don't have to, you just have to give it thought. You don't have to do a demographic and psychographic analysis. Forget that bullshit. Just think about who's listening and who's reading this. Think about your target population. For example, a tenant profile is very different than a partner profile. And a partner profile is very different than a lender profile. Those are three different profiles. You're all going to issue content to address those three profiles. So who's the target population? Next. What are the needs, desires, and problems of that target population? What are the needs, desires, and problems of that target population? So this is a circular formula. If you figure out your objective, you think through your target population, and you properly assess their needs, desires, and problems, and you talk about that, that's the content. The content addresses the problems, desires, and needs of that target population. You will be delivered with the objective you set out. So if we look, I'll give you a couple examples to drive the point home. If we look at today, so my objective is to reframe how you think about marketing. That's my objective. My target population is a bunch of amazing real estate investors that are educated. Okay, notice I'm not spending a lot of time convincing you that real estate's a good idea. I'm not spending a lot of time trying to persuade you about the ins and outs of real estate. You're all sophisticated real estate investors. You're all REIN members. I know that already. So that changes how I do the rest of my content. It'd be the same in a video, by the way. It'd be the same in a blog post or an article or any small post. Then I think about what are your needs, desires, and problems. And for all of you, for all of us as real estate investors, it all comes back to return on investment. Show me how I'm going to make money. I'm in real estate for two reasons: active income, passive income, financial certainty, financial security, financial freedom. So this entire talk has been designed to show you that marketing will help you achieve that. And it's resonating with you. So that's a content formula. Now let's do another example. Stuart, if you can unmute the mic for a second.
Okay, you're open.
Perfect. So let's take, who wants to be the guinea pig? We'll just do it together. Someone that not sure they understand. And it's okay.
All right, Jacob's ready. Jacob's ready.
Okay. So Jacob, let's go through this formula. Okay, let's say Jacob, what do you want to do? First, let's talk about this. Do you want to do, let's pretend, we're going to do a pretend right now. So I want you to pretend, you want to do a video? You want to do a blog post? Are you doing just a social media post on your LinkedIn? What are you doing? What's the type of content?
Let's start with just a post on LinkedIn.
Perfect.
You hear that?
A post. Yep, post on LinkedIn. Love it. So so what is your objective of that post on LinkedIn?
The objective would be to find distressed properties in Ottawa.
Love it. The distressed properties in Ottawa, love it. So what is the target population of that post?
In the sense of needs, desires, and problems.
Well, before we go there, don't go there yet. First, I want to know who's going to have a distressed property. Is it what's happening right now? Is a bunch of people getting laid off from the government? Probably not, but well, definitely not. But you know, who's the target population?
Could be federal employees having trouble with their paycheck because of Phoenix.
There you go. Oh yeah.
Okay, wonderful. So that's great. So that's a very specific one. And by the way, the more specific, the better. So that's great. So that's the target population. So next, what are the needs, desires, and problems of the Phoenix fiasco?
Let's say the need is to offload a property with a high mortgage because they don't have the income coming in from their federal job.
Okay, so they're highly leveraged.
Yeah.
They're highly leveraged. This mortgage is eating up, probably, if you think about it for a second, this mortgage is probably eating up into their savings like crazy. They're getting very, very it's a big problem that they had this amount of savings, and now because they've had to fund their own mortgage for X number of months, or this has been probably going on for months, Stuart, or has it been going on for years?
A couple of years now.
Holy shit, years. So point is that they're chewing into their savings in some way, shape, or form, and they're just having a really hard time carrying this thing. So that's what you would write about. And it doesn't have to be long. It doesn't have to be 700 words. If you're doing an article, I'll just give you some rough guidelines. If you're doing an article, you want to do 300 to 500 words. If you're doing just a post on LinkedIn, Jacob and everybody else, it doesn't really, there's no rule. It's not like, oh, it's got to be 50 characters or anything. Don't worry about the post. Articles or blog posts, 300 to 500 words. Videos, 1 to 3 minutes. Okay. Now, and what I would say is, and by the way, this is the most important thing. Everybody wants like the cookie cutter approach in terms of what to do. At this point, folks, it doesn't matter. You just got to do more. It's a volume game because they're going to binge consume you. Don't try to make it perfect today. They're going to binge consume you anyways. So Jacob, does that make sense?
Yeah.
Pretty simple, right? Like that's it. It's no more simple than that. It's no more complicated than that. You just think about your target population. What's the objective? What's the target population? What are the needs, desires, and problems? Now, it doesn't have to meet a need, desire, and problem. It's a need, desire, or problem. Okay, so again, don't overcomplicate it. Think about your target population and think what kind of problems they're going through and then talk about that. Simple. If you do that, you will resonate with them. And if you resonate with them, then you'll be all good to go. Now, here's another system. The other challenge that we all run into is we're busy. Half of you have jobs. The other, half of you are full-time real estate investors and you're busier than the people with jobs maybe. And you have kids and you have families and you have dinners and you have parties and you have all this stuff going on. You have mortgages renewing and insurance problems and tenants and all that crap. So everyone's busy. So the minute you have like 5 minutes to yourself, my beautiful face is going to come into your mind and you're going to say, JG said I should do a video. JG said I should post more on social, so I'm going to do that. Okay. Now, what the hell do I post about? And then you're going to go through an exercise which is going to be painful because you're not in the groove of this all the time. And you're going to go through this exercise. It's going to be painful. Now, you can eliminate all of that pain by doing what I call the content list. And the content list is in your phone or on a notepad. It's up to you, okay? I want you to keep a running list of content ideas that come to you because we all have content ideas. You were last week, you were driving your BMW and you were thinking, oh, you know what? I should really do a post about that Phoenix thing. That seems to be a big problem for people. People are having a hard time carrying their mortgages. I'm trying to get distressed properties. Shit, I think I could do a post on that. You immediately, right there that minute, I don't care if you're driving on the 417, you pull over and you jot the idea down. Okay, that may have been a bit of an extreme case there, but you get the point. Jot the idea down and build yourself a content list. So if I showed you my content list right now, let me just pull it up. Let me just pull it up, okay? So I always have a running list of all the content that just ideas that come to mind. You know, I'm traveling, I'm on the plane, I'm talking to Patrick Francie. Next thing you know, I'm like, oh, I should do this, I should do that. And next thing you know, I have all these ideas that come to mind. And when I do that, so I never run out of ideas. The minute I have 5 seconds to think or 5 seconds to do it to myself, I don't have to create the content from scratch. I already know what I should talk about because I've got my content list. You can see it there. So you got all my content lists, right? So it's all there. So it's a simple idea, guys, but it's a game changer. It is a game changer because it'll free you up from having to create all the time. The act of creation in marketing is the most difficult part of marketing. The act of creation. Okay, that's the second system. The third system, by the way, guys, this is a lot of work. So I've been working with this company called REMI, and if you want to eliminate the media confusion of what and when to post, go to that link right there, jot that down, remi360.com/free-resources, and you can actually get a pre-populated calendar of what to post on social media and when. Okay, so there's no more thinking if you want. That's another tool, right? It's all about systems. So there's 3 great systems we taught you. Taught you the content formula, taught you the content list, and this calendar system is very good. And by the way, this calendar, you're gonna get 1 month worth, just rinse and repeat. You don't have to recreate the wheel, just rinse and repeat, month in, month out, month in, month out. Same rinse and repeat. Get this calendar, you'll love it. Everybody jot this link down, yes? Thumbs up?
Can you still hear us?
Yeah, we could hear you. Yeah, you guys are nice and quiet. Almost too quiet.
Just curious, because I haven't seen this link before. Is it real estate based or is it just life based?
No, it's real estate based.
Okay.
Yeah. So here are the 3 steps I recommend, and I'm coming in for a landing here soon. The 3 steps that I want you to keep in mind as I recommend this is, number 1, consider lifetime value decision making. When you're making decisions, whether it's a relationship decision, a marketing decision, all of it, you've got to think about the lifetime value. Do not be short-sighted. Think of it in the long-term lifetime value. Next, it's about them, not about you. We are just trained and ingrained to think about ourselves first, but that's what makes marketing difficult for a lot of us. It's about them, not about you. Number 3, invest your time and your money into systems. Especially when it comes to marketing, systems are the key. These kinds of little systems I'm talking about make all the difference. And I know it sounds silly, but they really do make all the difference. And I'll be sharing a lot more on these kinds of systems, by the way, at Acre. I got 2 marketing talks at Acre. The marketing stuff has been so popular that we now do a 2-part. We do part 1 on Saturday, we do part 2 on Sunday. And I got rave reviews on in terms of feedback in Vancouver. And then I'll give you a bonus step, which is, don't forget that the best asset class is you and your brand. It's not your properties. It's you and your brand. Especially if you're doing the active income strategies like assignments, if you're doing active income strategies like fix and flip and refi, those kinds of strategies, rent to own, pretty much anything except buy and hold. You know, buy and hold 3 property, okay, it's not that difficult. But the minute you want to start scaling, especially if you get into commercial multifamily, there's a whole other marketing plan for that. So those are the 3 + 1 steps, 4 steps I recommend based on what I spoke about today. And also, who here is registered for Acre? Who here is coming to Acre? Raise your hand. Okay, everybody, wonderful. That's awesome. So Acre is going to be unbelievable. I just want to take a second and say that Acre's been completely redesigned. You got a little taste of it last year, a little taste. Actually, did you? A little taste, yeah, very little taste. This year in Edmonton, we redesigned it. In Vancouver, we made some more changes. I got to tell you, Toronto's going to be unbelievable. It's totally redesigned. It's in the trenches. It's really good stuff. And the other thing is, for the first time ever, because you guys are all REIN members, I think, you get to bring a spouse for free. You get to bring a spouse for free, and that's for REIN members only, in case you're not REIN members. So if you're not registered, you can get registered. Go to that link right there and get registered. But it sounds like all of you watching this now are registered. And then I just want to bring it back to this, our raising capital and strategic partnership events, which is part of our success formula. You're going to start seeing us release more and more of these success formulas. Unbelievable, really, really good, super intensive. It's not, I want to just say this about it. It's not an event, okay? So in the past, what's happened is, in the past, REIN has done an event called whatever it was called, JV something, I think. And it was just an event. That's all it was. It was a one-day event. And then what they've also done in the past is they've also had a home study course, which is essentially a manual, and they had that separately. Now, what we've done here is, this is a turnkey system. So the REIN success formula for raising capital and strategic partnerships is the entire success formula. So if you have a workbook and a manual, that's like 100 pages or whatever it is, that's epic. Then you have the one-day event that comes with it. Then you also have an online system that you get access to for life, which is an online step-by-step system. You get all the templates and documents. You get access to that for life. Plus, you get follow-up Q&A sessions on top of that. So it's not, you don't get you get all of it. That's what I mean. It's a turnkey system. It's very different from what REIN's done in the past. So even if you have done JV Secrets, I think it used to be called, even if you have done that, this is completely, completely different. Don't think it's just the same thing with a new skin on it. Not at all. It's a completely redesigned thing. And that's it. That's it, guys. That's all I got for you today in terms of content. I do want to take some time and answer some questions, and happy to do that. And hopefully this was good for you.
This was
Sure.
great. This was great.
Yeah. Actually, we can do that here now. I mean, even if this is just a small part of what's going to be happening on that April 21st Success Day, I think it's going to be totally fabulous.
Awesome.
Yeah.
Thank you, Denise. Yeah, it's exactly right. It's just a small sample of what I pulled out, and there's so much more. I got to tell you, if you're interested in raising capital, it's an unbelievable turnkey program we've put together, and it's what it is it's these systems, and you guys know, because you're all REIN members, you know how Jennifer Hunt is a system queen, if you will, with her spreadsheets and her systems and her matrices and her Venn diagrams and her decision-making models. We've applied all of that and all of this and everything else to raising capital, and we've simplified it like I've never seen before. So whether you're just getting started in raising capital, it's totally for you. And even if you've raised a lot of capital, it's totally for you. And then this one thing happened which completely shocked me and Patrick, is because we just did our raising cap, the one-day event that's part of the system. We did it in Vancouver 2 weeks ago, and I was shocked. Half of the people buying raising capital, they're not looking to raise capital. They have capital and they want to invest it with someone, and they're there to find a partner or to at least know about a good system so they can see who to invest with, to find out if their partners are following this kind of system. It was fascinating. I did not expect that. I thought everybody there was there to raise capital, but it turns that wasn't the case. So that was very interesting. So I expect Toronto will be somewhat similar. It's a small crowd, by the way, folks. We're limiting the crowd to roughly about 50 people. Very, very interactive, very in the trenches. I mean, you're in there, you're shaking hands, we're teaching you stuff, and you're actually applying it right then and there. It's not teaching, it's actually very experiential.
Yeah, and I'm going.
Oh, good.
Yeah, I've already signed up for it.
Yeah. So who else has already signed up for it here? Anybody else? So 3 of us? Okay.
Awesome.
Did you have a question? Yeah. Christian,
Go ahead. Yeah, any questions, fire away.
I always have lots of questions, JG, so I'll just start off the rally here for everyone. And so that you presented back a little while ago a great chart that showed demographic profiles associated with different types of social media feeds.
Yeah.
I'm wondering if you have an updated version of that to take into account the changes over the last couple of years, because it's a beautiful.
Well, I'll tell you what, Christian, how about I make that part? I will, thank you for that request, and I will, I'll put that in my acre marketing talk.
Perfect.
I'll put an updated slide in the acre marketing talk, and if you remind me, typically my assistant accompanies me on these things, so I don't, so she can jot these ideas down. But actually, maybe Denise, if you send me a text on this, what I'll do is I'll have a handout too, Christian, so that you guys can download the handout and have it at home.
Perfect.
Yeah.
So Veronica has a question too. This is my daughter, JG. She's going to take over the empire. So.
Oh, awesome. That's great. Congratulations.
I just had a question on you said that 1 minute to 3 minutes is what you would make the length of the video.
Yeah.
I found within 45 seconds, people are switching to the next video. So I'm curious as to why you want it to be that long.
Yeah, so it's a great point. So there's a lot. So first of all, in an environment like this, I have to make recommendations and speak in absolutes. There's actually about 7 different types of videos you should do, all the way from 15 seconds, 45 seconds, 1 to 3 minutes, 5 minutes, 12 minutes, and 20 minutes. That's actually what I recommend. But if I said that to all of you, you'd start to think, holy shit, I can't do this. So my recommendation is most people 1 to 3 minutes they're comfortable with. And you're right that over at 45 seconds, they're going to switch, which is why you got to make an impact in the first 30 seconds. If you don't make an impact in the first 30 seconds, they're switching. There's no doubt. But also keep this in mind, because I hear this a lot. If they switch after 45 seconds, that's because you haven't done your job. That's because they're not engaged with what you're saying. But the people that are engaged, they want more. You've seen this before where you're consuming something on social media and you're watching this video and you just can't stop watching the darn thing. It's so good, and you're in there for 2 minutes and 3 minutes and 5 minutes. So this is interesting. Don't do your audience a disservice by only putting out super short videos that are not content heavy. Feel free to go deeper and deeper and deeper.
Does that make sense? Yeah. She does a lot of social media. So,
Yeah, well, your age, she would.
active marketing.
Now, but let me, if I may actually go one step further than that, if you're very active in social, I love it. Here's what I would say. You're going to find out if you're as active as she is, and I haven't checked out her profile, but a lot of people that are active, your fans and your demographic and the people who follow you, they end up getting into a rhythm of what they like from you. So if your fans like 45-second videos, awesome. That's great. Do more of that. You know, Denise and Stuart, for example, their fans may like, the people who follow them may like more extensive videos. Razna, I don't know, is Razna there? No. So Razna does different style of videos. So you got to build up your fans, and you build up what they like, and they'll tell you what they like. I'll give you a perfect example. At another one of my businesses, every time we put out educational content about that's relevant to them, it's okay, but it's not great. Every time I talk about the staff and I feature the staff and I talk about their personal lives, the stuff goes off the charts. That's what that audience likes to see. And you'll see that by the likes, the engagement, the comments, and also the shares. And if you're running, I'm referring to Facebook in this case, but all the platforms, you'll be able to see the reach of those posts. You'll be able to see the engagement of those posts. So the point is this is another thing I'll teach at Acre, but I believe in making data-driven decisions. What you and I think is very irrespective to what the data tells us. So just like in real estate, you got to make economic, you got to base your decisions on economic fundamentals and data. It's actually the same in marketing.
That's good.
What about anybody else out there? How many of you are actively talking about real estate on your social media profiles?
And what are you posting about? Give me some ideas.
Video walkthroughs.
Video what?
Walkthrough of.
Video walkthrough of properties, okay? What else?
I love that.
Market updates,
Landlord advocacy.
landlord advocacy.
Awesome. Yeah, perfect.
I post renovation photos and, before and after photos.
Yeah, renovation photos before and afters.
Yep, perfect. That's great. This is all fantastic. Yeah, another one that's very popular right now is like, in most cities, we're all going through a housing crisis of some way, shape, or form. The supply is just too tight. Feel free to talk about that if you're comfortable. What the most important thing is you talk about things that you're comfortable with, and then feel free to slowly expand what you talk about. But you got to be comfortable with it. Housing crisis is a great thing to talk about. And don't hesitate. Think back to your target population. Don't hesitate to put out content. Like, I'll give you an example. Let's just say, I'm just going to pick on Christian now because he's there and he's eating breakfast. So let's just say you're in a refinancing zone, right? You got to think strategically, guys. I can't emphasize this enough. Let's just say you have 5 properties and 3 of the 5 are refinancing this year. I'm making this up. Well, you're going to be dealing with lenders. You're going to be dealing with banks. That's coming. So you should change your content strategy to start addressing the needs, desires, and problems of the lenders that are checking out your social media. If you don't think that the bank manager is going to your social media to check you out, he or she is definitely doing that. They want to see what the hell you're up to. They don't believe your pro forma statements, just so you know. They want to go see it for themselves. So if you know that you're in a big refinancing zone, then you should be putting out a lot more lender stuff. If you're in a big acquisition phase, like my friend Scott over there is looking for distressed property, then you start to move your content to that. But don't go all or nothing. You should essentially space your content. Let's just say you have 3 audiences. You should have 50% of your content focused on what your active objective is at that time. 25% split between the other 2. So let's just say, I'm making this up, but let's just say Christian is refinancing a ton of properties. So he knows lenders are going to be looking. He knows so he should have content which is going to make the lenders feel better, which means you're talking about stuff that's important to lenders, like longevity, like trust, like credibility, all that stuff. And then, he still needs tenants and he still needs partners, because every one of us needs those 3 things, pretty much all of us. So then 25% of your content should be toward tenants or your other clients. Let's say you're doing private mortgages. You're not looking for tenants, but you are looking for investors to invest with. And then same with partners. So that's what I say, 55 and then 25, 25.
The one thing that I noticed that you sort of didn't mention, of which is great, because I don't want people to focus on that, but I mean, I'll be honest, we're kind of going to touch on it a little bit when we speak about raising capital. However, it's the fact people are doing this so that people are known out there, that they know they are doing real estate. So you draw people to you. Too often we see people out there right now going on social media saying, I just bought this property. I'm looking for joint venture partners. I'm going to pay this much. And they are so much doing this from an illegal perspective that they could get in such big trouble, and people don't necessarily realize that, which is, great that you're talking about this draw, because that's what it should be. Educate people, let them come to you. But when you're going out there and publicly going out, soliciting funds, soliciting or even mentioning an interest rate, you really are putting yourself in big jeopardy.
Yeah, no, it's a great point. It's a great point, Denise. And that is actually something we do touch on, raising capital. And we have an approach which is much better than that. A, it works better than that. The other thing is, A, it works better than that, and B, it's on side with the soliciting funds components you're talking about. But the most important thing is that shit doesn't work anymore. You can't be out there saying quack, 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 ain't I great? Look at me, I'm doing so well. That people get so tired of that so quickly. So you need to add value. You need to find a way to. So I would say if you're leading with that, like anybody leading with that kind of strategy, Denise, they could be doing it so much more effectively if they just weren't like a horny teenager.
Well, I hope that a lot of those REIN members.
I thought that last part was funny. I thought that last part was funny.
I giggle.
We all giggled. We just didn't laugh out loud. We all giggled. But yeah, I feel for those poor REIN members when I see that, because if I know them, I will reach out to them. I will. It's just part of me to let them know that they can get themselves in serious problems if they start advertising publicly the way they do.
Well, and this is exactly why, you know, we've refreshed, revamped, and put this new turnkey system together for raising capital, because that was happening, and that's an old strategy. That stuff's from, you know, laws have changed, things have changed, and you got to get updated. You got to get your education updated. You got to get your knowledge updated. So yeah, great point, Denise.
So you're going to hear it again for those of you that are at Acre and listen to our talk.
Yeah.
Really good point, because from an OSC perspective,
Yeah,
right?
I know.
It's very strict, and it's not, you know, a small fine, right? It can involve jail time.
Oh, yes, absolutely.
So,
But I've seen it out there, actually, that I even know the person that went out and advertised for a joint venture partner for $87,000 and got a stranger to say yes. And he thinks that's the greatest thing since sliced bread.
yeah.
And I'm thinking, oh my gosh, you got lucky once. That's it.
Yeah. And just because you got lucky once doesn't mean it's not over yet. So, yeah, you know, these are serious issues, which is exactly, you know, it's important to know the rules, follow the rules. And that's the thing. I mention this all the time. Patrick and I were talking this morning, and the thing with real estate is this is why getting the education is so important, and whatever that means to all of you. But, you know, every mistake made in real estate is exemplified. It hurts more than the average mistake. And it's the same with the successes. The successes are exemplified too. It's like, wow, that was incredible, you know. But the fact is that all of us have to be working our businesses from the point of not making mistakes, because the real estate will take care of itself. I mean, if you've been in real estate long enough, you know that the real estate game is really good, especially in Ontario. You've had a great run, and you continue to have a great run. But you got to manage that risk mitigation component, because, man, you can get hurt. You know, this person gets slapped with an OSC, that the whole friggin' business is gone. All this properties, everything is gone. Is it worth it? Hell no.
And then it's going to put a lens on real estate investors, period, which can create even more problems. So
Yeah, exactly.
just from a marketing perspective, I just kind of have maybe a comment about Instagram. I know you said you haven't really seen much. I'm not much on Instagram, I know. However, I have started doing some of the stories, I guess. But the one thing that I sort of don't like, you put in, well, call it an effort. Sometimes it's just really quick, but they last less than 24 hours, then it disappears. So if somebody's binge watching, they don't see them anyways, unless they have to be on that day.
You're absolutely correct. And what will happen though? I'll give you a perfect example. I was just meeting with a new client Thursday, and in our meeting with that client, they referenced essentially. I was with a business partner of mine, and they referenced her life, like the last 2 weeks of her life, all of it. They had been because you're gonna binge watch. You're going to binge watch stories the same way you binge watch the rest, but you're right. They do disappear after 24 hours. It's a lot more work to do Instagram stories, but I'll tell you this, Instagram stories is the place where you're getting the best organic reach right now. What I mean by that is on Facebook, the organic reach, I'm getting a little technical here, I apologize, but the organic reach on Facebook has gone down over the years. The best organic reach on Facebook was 2012 to 2014. Then they came out with their advertising platform, and their organic reach started going down because they want you to advertise to get the reach up. That's how they make money. It's the same with Instagram. Instagram organic reach on their feed, not on their stories, was really high 2 years ago. Now the stories organic reach is really high because they want you to pay to push the feed. So this is all a question of this, Denise. It's all a question of. But the fact is that if you're, like in your case, you're good, you do a good job on Facebook, and if you're gonna add a secondary platform, I would say you add LinkedIn or invest the time in Instagram. Instagram is and it depends on your audience. Back to Christian's point, which I'll be showing all of you at Acre, it depends on who you're targeting. You know, if you're targeting a 30 to 45-year-old or a 30 to 50-year-old, that's professional, that's hip and cool and modern, you're not going to find them. You're going to find them on Instagram. That's where they're hanging out, those people. So they're properties.